so this is worrisome. And the pandemic-related decline was especially pronounced among non-white men.
And in our workforce.
If we retreat that means those of us who are on the front lines, we need to make sure that we redouble our efforts and invoke those Keshem, King, and the leaders of the past to make certain that our best days are ahead of us as opposed to stagnating today.
But the move to ensure that we have a diverse workforce has met resistance from those who fear they're disadvantaged by giving preferences to others. In a March 2022 Pew poll, 74% of respondents said race or ethnicity should not be a factor.
You can get 2 cars there. No, you can't.
This week, the Supreme Court responded to those concerns by limiting reference to race in college admissions, posing new issues not only for universities, but also potentially for corporations in their hiring and promotion.
The court has effectively ended affirmative action in college admissions,
potentially leaving in limbo the $340 billion McKinsey reports corporations pledged to invest in diversity and inclusion from May 2020 to October 2022.
We have a lot of talent who wants to come and join us. Like every institution, we made some adjustments around the capacity.
And to take us through what exactly the Supreme Court's ruling this week might mean for talent in this country, welcome now Darren Walker. He is the head of the Ford Foundation. Darren, thank you so much for being back with us. You've written an op-ed piece in the New York Times, a very profound one, questioning some of the fundamentals of the Supreme Court's decision. And let me ask you, because you go through your personal experience and how that informs your view on this, what do you think that the Chief Justice Roberts and the other 5 members of the board, what do you think they don't understand about America today?
Well, I think what they have not taken into account is the reality that our great history in this country also has some regrettable vestiges. The racism that has regrettably been a part of our country's history, the vestiges of that remain with us. We are still a highly segregated society in our educational system, our workplaces, our criminal justice system, and other systems in this country. And to simply say, in order to stop discriminating, we must stop discriminating, creates a false moral equivalency between those who historically sought to keep the Jim Crow hierarchy, the racial hierarchy that characterized this country for most of our history. Those people are doing the same thing as those of us who have sought to bring about more justice and redress the history, the vestiges of racism that unfortunately remain with us today.
Have we made real progress with what is called by some affirmative action? I mean, we can go back, it's been around for a long time now. Go back to the Bakke decision in 1978. That's a long time ago now. Did having affirmative action help us make progress in the direction we should be making progress?
Well, David, I would not be here with you today were it not for affirmative action. There is no doubt that an entire generation and Latinos in this country was helped for in part because of affirmative action. So how affirmative action maybe has benefited from living in a country that believed in my potential. And even though I was a poor kid living in a rural community, America cheered me on. This country wanted me to win, succeed, and that manifests in the ways in which my public education, Pell Grant, graduating from college without any debt, all of this was possible for me to get on the mobility escalator and ride it as far as I could and my talent would bring me. But there had to be a sense of understanding of racial consciousness, and what the Supreme Court and others fail to do is that it is time for us to move beyond having any consciousness of race. We're not saying, I don't profess to believe that race has to be the deciding factor, but to say that it is unconstitutional to have any consciousness of race and the legacy of racism that remains with us, I think is not good for our democracy. The
week came in the context of higher education through universities. There are questions now about how much farther the ramifications may be in the future, and particularly in the private sector. Let's talk about corporations, because a lot of corporations have their own version of affirmative action in hiring, in promotion, and development of talent. What are the possible ramifications in the private sector where we decided here to restrict to colleges and universities?
Well, there's no doubt that there will be some who will challenge private sector policies around promotion, around business policies for diversity. Diversity is a business imperative today. No public company, no private company that has customers, consumers, stakeholders, investors can ignore the need for diversity. Now, the research, the data tell us you can't ignore it either. If you want to be a high-performing enterprise, if you want to be an organization that succeeds, you are less likely to succeed, the research tells us, if you are less diverse. So every indicator of success in the economy in the corporate world, I believe, requires looking at diversity.
So race is one form of diversity. It's not the only one. You have ethnicity, you have socioeconomic status, you have religion, lots of different issues. Not necessarily the same history for the United States of America. Are there surrogates? Are there other ways to achieve some of the diversity you described without it being specifically race? That is something that's discussed in some of the things.
I think we should be very sensitive to socioeconomic background. I am concerned in this country about what is happening to working class white Americans, rural people who feel left out and left behind. And we need to absolutely understand the needs of those communities, because we have not done enough to ensure their economic success. And part of the reason for that, their feeling of vulnerability, is because of the growing inequality we have in this country. To the question of is socioeconomic background a proxy, what the Wall Street Journal revealed today in a very good report, they looked at a number of states that had implemented non-race-based criteria, not allowing race to be considered. And in each of those states, the numbers, particularly of African Americans and Latinos, went down, sometimes by 50%. So it is not true, as some have suggested, that by simply finding a proxy for race, we will be able to come back to the levels of enrollment that we saw before. So it is not a proxy. The thing, David, that I also find interesting on this question is those who are fighting so aggressively to undermine racial consciousness in higher education admissions have not, with the same fervor, went after the other ways in which bias is built into the system, most notably the legacy programs that exist at most selective schools in this country that give privilege and bonus points to the children, the grandchildren, the legacies of people who have attended these institutions, who are primarily white and primarily wealthier. This is patently unfair, and yet the opponents of affirmative action have been silent, at least silent in the courts on this issue. And so I think the genuine sincerity that is sometimes voiced by opponents of affirmative action are, in my mind, questionable when they're not as aggressively looking at the other ways the system might be deemed unfair.
Darren, part of what you described interferes with what we call mobility, ability for people to raise up, the sort of the American dream from the lower ranks, socioeconomic, and the upper ranks. When you took over the Ford Foundation, you embraced justice as your fundamental tenet. That's what you're pursuing. What can we do to promote mobility? Because I must say that's not just a matter of fairness or justice. It also, in the long run, could help us economically grow our economy more robustly.
We have to have a country where hope is at the center, as it has been for most of our history. The hope, the optimism that has propelled generations of Americans forward. Part of the reason for that hope was a belief that the playing field was fair. And what we know today, David, is that the playing field is not fair. The playing field tilts towards those who are already advantaged and compounds the disadvantage of the already disadvantaged. And so if we want America to be great and to realize its potential, we have to have a fair playing field so that the mobility escalator that I got on is possible in the future. And unfortunately, we know from the research, the data on economic mobility, that there are many other countries outperforming us. If you want the American dream, move to Canada. They are outperforming us on the very idea of what opportunity, equality, mobility means in a country. I don't want America to be beaten by the Canadian on an idea we created, a democracy that is unparalleled in its history and its potential. I want America to be America.
Darren, thank you so much on being on Wall Street Week. That is Darren Walker. He is the president of the Ford Foundation. Coming up, we go over the results of the first bank stress test since all those bank failures back in March. Former FDIC Chair Sheila Bair.
The big issue, obviously, is they don't stress high interest rates.
This is Wall Street Week on Bloomberg.
This Independence Day, Bloomberg and Morgan Stanley are proud to present the Boston Pops Fireworks Spectacular. Join conductor Keith Lockhart with special appearances by En Vogue, Broadway's Mandy Gonzalez, and Locash. Watch and listen Tuesday, July 4th, starting at 5 p.m. exclusively on Bloomberg Television, the Bloomberg Business app, and BloombergRadio.com.
Meet Sam. Sam is 30 years old. He talks a lot about doing good. Sam may not act the part, but he's a bogeyman. But on December 12th, 2022, everything changes for Sam. And what he calls a screw-up, the U.S. government calls one of the largest frauds in history.
They had lost a very significant amount of money.
Lots of people were hurt badly, which left everyone wondering, who is Sam Bankman-Fried? From Bloomberg and Wondery, the makers of The Frank Next Door, comes a new series, Cellcaster, The Fall of Sam Bankman-Fried, a story of incredible wealth, betrayal, and what happens when that talk of doing good goes really, really bad. Follow Cellcaster, The Fall of Sam Bankman-Fried on Amazon Music or wherever you get your podcasts.
You realize that it was just a big smoking crater of a company.
That's when I started saying, don't trust Sam Bankman-Fried.
Breaking news first.
The Supreme Court throws out President Biden's student loan relief plan, a rejection of one of the president's signature initiatives that could affect more than 40 million Americans.
The court saying the Biden administration overstepped.
I believe the court's decision to strike down my student debt relief program was a mistake.
This court seems to want to repeal the 20th century.
The impact is going to be felt for a long time. The question is, what do Democrats want to do about it?
Continuing coverage and complete analysis
On Bloomberg 960.
of their stress test, and all 23 banks passed, I would say, with flying colors. To take us through what we learned, and maybe as important what we may not have learned from these tests, we welcome now Sheila Bair. She, of course, served as the chair of the FDIC. So, Sheila, thanks so much for being back with us. What did these stress tests tell us about the state of the banking industry?
Well, they told us that in a severe stress scenario, as the Fed has defined it, they would survive quite well and still have plenty of capital to keep lending. But I think there are a lot of problems with this scenario and the assumptions that underpin the stress test. So I don't think we should take a lot of comfort from it. There's a lot of work that needs to be done. And to its credit, the Fed acknowledged that there are a lot of different potential risks out there that may not be reflected. So I do think we should not take a lot of a lot of comfort in this. The big issue, obviously, is they go for stress high interest rates. That is the issue confronting the banking industry right now. And ironically, if you assume, as their stress test does, that rates go back to zero in a severe recession, that actually helps banks that have a lot of unrealized losses on their books, because when you take rates back to zero, those low-yielding assets regain value quickly. So in a way, they're rewarding banks for not managing their interest rate risk very well, and that's a big problem. The other issue is that, again, related to interest rates, is what happens if we have a protracted period where the yield curve is inverted, meaning that short-term borrowing rates are higher than long-term rates, which is a situation we've had for a while now. That leads you into a situation which we're already seeing, where banks' cost of funding, what they have to pay on deposits or borrowing, will exceed what they can get on their loans. And that's going to be a real challenge for banks. And those are the kinds of issues the Fed really needs to be thinking about and putting banks through. Not this kind of artificial assumption that if we have a recession, rates go back to zero, and we start the party all over again, and their assets are inflated, and they don't have to pay anything on the deposits anymore. That's just not realistic.
How does liquidity figure in? Because one of the issues, obviously, in why the banks have failed is they just didn't have the liquidity, so they had to sell the securities, as you pointed out. Does liquidity factor into the stress test? Should it?
It does not really. There are separate tests on liquidity. They're not public, but they probably should be public, and that liquidity risk needs to be integrated into the capital stress testing, because if you cannot separate these out, a bank that is perceived to be weak by the market will likely have deposit runs or accelerated deposit withdrawals. That means that they might have to sell securities they weren't planning on selling, the so-called hold-to-maturity securities, which will have a big impact on capital. So these need to be integrated together. You can't just have a clean separation. And again, that's part of the broader interest rate scenarios, liquidity risk, as they impact capital, that the Fed should be running these banks through.
We're talking about the banking sector, the regulated banking sector right now. There's a lot of transactions being done outside of that, as you know so well. And if anything, that has been growing dramatically. Ironically, that's in part because of the difficulties the banks are having. So they're getting out of some of the business that private credit is stepping into. Is there an effective way to take into account the possible systemic risk from the non-bank banks?
So it's a huge issue, because in my experience, we had a lot of non-bank lending during the great financial crisis. They were doing the lion's share of the mortgage lending, right? The big banks were doing the securitizations that fed the beast, but they were doing the lion's share, and they still do, frankly. But those sources of credit dry up very quickly if you get into distressed market situations. The banks that have stable deposits are the ones that keep lending. So if you keep squeezing the banks, and if we overreact, especially with the smaller banks, the regional and community banks, to recent failures, you're going to even push even more of that into the private sector. You're going to constrain the non-bank sector. You're going to constrain their ability to lend, and that's going to make the system even more fragile. There's also not a lot of transparency between the intersection of the regulated banks and the non-bank sector. Again, this was a huge problem during the great financial crisis. Most of the mortgage lending was at the non-banks, but it certainly flowed back into the banks when troubles emerged. So this is another huge area that supervisors have not been sufficiently focused on. We've been talking about non-bank risk for years. There are tools that were provided in Dodd-Frank to deal with it. They're not being used very well. And, just more scrutiny. This is more an issue for the larger banks and the interrelationships that they have with a lot of these private equity funds, venture capital funds, other, so-called private funds. Those losses, to the extent those bank customers are going to have problems, that's probably going to flow back into the larger banks as well. we don't have a good understanding of that.
You referred to regional banks and also community banks and their role overall in the ecosystem. That's certainly come to the forefront. How concerned should we be about the role of the community banks, the regional banks, versus big money center banks? And is there something we could do to really ensure their strength? Because they do provide a lot of the lending and the credit to some of the smaller businesses across the country.
They do. And those are the engines of job growth. So yes, I've been saying for some time now, we need to at least have a temporary guarantee for transaction deposit accounts that these smaller banks have with their business customers and other institutions like, local governments, nonprofits. These are accounts that are used by their customers to pay bills, to make payroll, bring revenues in, pay expenses. They're operational. They don't move easily, but they're almost always above the insured deposit limits because you got a lot of money flowing in and out to pay expenses, payroll and other bills. So we provided a temporary guarantee for them during the great financial crisis. We were seeing deposit instability then with the smaller banks. Those deposits were migrating to the so-called too-big-to-fail banks. You want to stop that. We've had enough consolidation already. So reinstituting at least on a temporary basis this guarantee again, I think would be hugely stabilizing to those regional and community banks. Unfortunately, Dodd-Frank, for whatever reason, it took the authority away from the FDIC. It's called a systemic risk exception which is an extraordinary procedure, to reinstate that. Now there's a fast-track approval process in the bill. The president has to ask for it. The president, for whatever reason, has not asked for it. But I do think there's insufficient focus on stabilizing liquidity for these community and regional banks. And the more they have to, pay really high rates on deposits or borrow from the Federal Home Loan Bank, it's really expensive borrowing, the more that is going to distress them and constrain their ability to lend. We need to stabilize those accounts, especially transaction accounts, with a much higher, if not unlimited guarantee, at least on a temporary basis.
Michelle, this is very helpful. Thank you so much for joining us.
It's my pleasure, David.
She is the former chair of the FDIC. Coming up, Room with a View over Central Park. Another New York icon is on its way back. That's next on Wall Street Week on Bloomberg.
Now, your 3-day weather forecast on Bloomberg 960.
Going to be a fair evening, followed by some clouds around later on, tight and patchy fog as well, low temperature.
It's time for the Silver Solaris Savings Spectacular. Your electric bill goes up as much as 5 to 8% every single year. Maybe your bill was $400 a month last year. Maybe $500 a month this year. Maybe $600 next year. How long before it's $1,000 a month? Energy companies are making billions in profit. Does that seem right to you? This month only save up to $3,000.
200 and earned Grammy nominations. Doja Cat's genre-crossing style was showcased in singles like Celebrity Skin and Attention. I'm John Marshall along with Bree Wood on your home for 24/7 News, the Black Information Network.
Looking for ways to support your community? 51% of all food programs in the Feeding America network are volunteer-run. Learn more about how you can play an important role in ending hunger at feedingamerica.org.
The power of information, keeping you up to date on the Black Information Network. The Bay Area's BIN 910. Your money on the Black Information Network.
More Americans are saying they have confidence in the U.S. economy. A Gallup poll shows June's economic confidence index score was at -32 on a scale from -100 to +100. The June score is the highest since January of 2022, with the score almost always under 0 since the pandemic recession. Republicans rate their confidence much lower than Democrats, but both have increased similarly. And the Biden administration is announcing a new multi-billion-dollar plan to help prevent and reduce homelessness among military veterans. The plan includes $3.1 billion to support efforts to quickly get homeless Americans a place to live. The administration is also announcing more than $11 million for legal services for homeless veterans and $58 million to help homeless vets find jobs. And some good news if you're hitting the roads. for the 4th of July holiday. Gas prices are projected to be at least $1.30 lower than they were a year ago. The national average now about $3.49. Money news at 24 and 54 past each hour. I'm Natasha Williams on your home for 24/7 News, the Black Information Network, and BINnews.com.
The only news that hears you.
The Black Information Network, the Bay Area's BIN 910.
I'm Bree Wood.
And I'm John Marshall on your home for 24/7.